What's up, guys? Alvaro here, and welcome to the bilingual stock market channel again. Let's go ahead and talk about some stocks and about the bloodbath that happened today in the markets. And the markets were once again pretty ugly today, led by the Russell 2000, which went down 1.45%. The Nasdaq went down 1.23%. The Dow Jones went down 1.42%. And the S&P 500 went down 1.01%. The only assets that went up today, guys, were gold, oil, and silver. But other than that, everything went down. We had a nasty day across the board. And mind you, and even though the figures that we can see related to the indices are kind of alarming because we had a very nasty day, the outcome of today's trading session could have been worse, guys, believe it or not, because the markets dropped for the most part since the opening bell rang, and we saw some sort of recovery once we had President Biden coming out to provide details about the sanctions on Russia because of the situation that we are seeing as of now between Russia and Ukraine. And the second, President Biden said that the pain of U.S. sanctions will not affect, I am quoting, will not affect the U.S. Then after that, we saw some sort of an acceptable relief rally into the closing bell. However, the figures speak for themselves. So we need to keep a close watch on whatever is going on in Russia and Ukraine. And let's hope for a total invasion not to happen, guys. If we happen to see a total invasion of Russia in Ukraine, then we are going to see a another very nasty leg down in the markets. Actually, President Biden said during his speech today from the White House that it looks like that Putin is for the most part preparing a full invasion in Ukraine. So, and as I just said, let's hope for that situation not to happen. If we take a look at the sectors of the markets, nasty day across the board. Not even one single sector went up today. And the best performing sector today was utilities, which went down 0.11%. And on the flip side, we find consumer discretionary. This sector had a very tough day because of Amazon and Tesla, two very heavy components of consumer discretionary. And both stocks went down a lot today. I think that Amazon actually closed today's trading session below $3,000 a share. So consumer discretionary went down today 2.92%. If we take a look at the advances and declines distribution, we can confirm that we had a nasty day, as I have been telling you guys. So today we had 2,138 stocks going up, and we had 5,377 stocks going down. When it comes to the trades that I took in today's trading session, let me show you the first one, guys. TQQQ. So today the Nasdaq 100, and I am going to break down the Nasdaq 100 in just a second for you. The Nasdaq 100 revisited the lower support, or the bottom until now, of the month of January, and I was able to take a day trade from that support. So this afternoon I purchased 150 shares of TQQQ, or TQQQ, at $47.75, paying $7,162. And this was, guys, something like a 20-minute trade. So I sold out of these 150 shares at $48.69, and I was paid $7,302. I ended up making over here $140. And with Tesla, my Tesla, guys, I did it again. I sold a leap, and I was able to buy it back today, and I made good money over here. So let me show you. On Friday, I sold the $1,500 call that expires on September of 2023, and I was paid way back then $10,410, And today, since Tesla fell off a cliff for the most part during all of the trading session, I decided to buy back the LIP that I sold on Friday, and I paid $9,850. So I ended up making over here $560, guys, in just a matter of 4 days. So between the day trade with Tcod and this trade on Tesla, with which I bought back the LIP that I sold 4 days ago, we ended up making today $700. So despite the fact that today we saw a bloodbath in the markets, I was able to make good money with the 2 trades that I just showed you. So S&P 500 goes down today, as I said in the introduction of this video, 1%, and it closed today's trading session at $4,304. So, needless to say, guys, the bears are in absolute control of the S&P 500, no doubt about it. Today, and this is something that I am going to show you in just a second when we go over the NASDAQ 100. So today, we might start to see the completion of a double bottom formation in the case of the NASDAQ 100. Okay, I will show you that information in just a second. In the case of the S&P, we closed, as I just said, at 4304. Watch out for 4222, guys. That's the lower support or the bottom of this corrective process until now. And the S&P hit 4222 back on January 24th. So I'm thinking, guys, and this is obviously wishful thinking, if the S&P keeps on dropping and finds support at 4222, we might see the completion of a double bottom formation, in which case the S&P would have to go up to 4444. 4442 or 4,442 points happens to be a previous area of resistance back from early August. So this might be bullish, and as I just said, and you guys know that I am a bull, so this is for the most part wishful thinking, because as of now the S&P looks pretty bad, clear downtrend, and the S&P is trading below all the moving averages that I use: 180 SMA, 50 SMA, 100-day moving average, and the 200-day moving average. However, if this lower pivot of 4222 happens to be visited, and if this pivot is broken to the downside, what are we talking about here, guys? We're talking about 4160, a previous area of support back from mid-June. So I'm thinking, guys, that if we happen to see a flush down in the case of the S&P, and if 4222 happens to be broken to the downside, and if we see a quick visit down to 4160, then the RSI of the S&P, which as of now is at 30 points, is going to be way lower, and that is going to increase the likelihood for the bulls of the S&P to find support at a previous area of support at 4160 and then bounce back up. So the S&P isn't looking any good, obviously, no doubt about it. And let's see what happens, guys. Are we going to see a double bottom formation from 4222, or are the bears going to be able to push the S&P 500 down further, and maybe we are about to see 4160? So go get your popcorn, guys, because this is getting very, but very interesting for the bears. No doubt about it. Okay, NASDAQ 100 goes down today 1%, and it closed today's trading session at 13,870 points. So take a look at what happened here, guys. The NASDAQ 100 found support today, and this is the spot in which I picked up the 150 shares of Tcod that I just showed you at 13,720 points. This was the lower support of January. So as of now, the bulls or the bears, let's say, revisited the lower support or the bottom of this corrective process so far at 13,722 points, and they were rejected because we saw an acceptable bounce back up over here. So if we are actually going to see a double bottom formation, the completion of a double bottom formation. In the case of the NDX, the bulls have an important an important gap to fill up to 14,400 points. We are talking about a former area of support back from early October. However, what would happen if this double bottom formation is invalidated with the bears taking on 13,720 points? What would be the next gap down for the NDX? I am going to pull up here the 1 year chart. And in that case, guys, I think that we are going to see 13,400 points. We are talking about a former area of support back from early May of last year. So, needless to say, from a technical standpoint, the bears are in absolute control of the NDX, clear downtrend. The NDX is below all the moving averages. And maybe, a light at the end of the tunnel would be a flush down to 13,400 points, in which case the RSI of the NDX, which as of now is signaling 32 points, is going to be way lower. So the NDX would visit 13,400 points, being in a very extreme oversold situation. Let's just put it that way. And if that were the case, we might see a bounce back up, or maybe we are about to see the completion of this double bottom formation. So all of the indices look pretty bad, guys. And I have been telling you here in the channel that the markets are doing what they always do before a new cycle of interest rate hikes is started out by the Federal Reserve. So maybe until March 15, we are going to be wandering somewhere around the current levels of the S&P 500 and the Nasdaq 100. Who knows, guys? Let's see what happens. Virgin Galactic just reported earnings. Let's see what happens over here. What is SPC doing after hours? 1 day, 1 minute chart. It isn't doing much. It is actually up after hours, right? So SPCE went down today's 6.90%, and it closed today's trading session at $7.82. And yeah, it is up after hours. It is actually up 4%. So what happens over here? Obviously, guys, you know that SPCE, or Virgin Galactic, is not a company that makes any money as of now. So what we are actually looking for over here is guidance for the most part. Let's see if they can precise a specific date for the suborbital trips to begin. So let's see what is going on over here. Okay, so Virgin Galactic Holdings Q4 EPS, this is a loss, obviously, guys, came in at 31 cents, beating the estimate of 34 cents. So they are losing less money relative to the estimate, and sales came in at $141,000, missing the estimate by a long shot of $330,000. So they beat on EPS, they missed on sales. Okay, Virgin Galactic sees Q1 free cash flow loss from $85 million up to $75 million. Or from $85 million down to $75 million rather. Virgin Galactic stock rises after narrower Q4 lost first sales. So the company is starting to make some revenue over here, which is obviously positive. Let's see if we have some sort of figure, guys, when it comes to bookings for the suborbital trips. Let's see. No, we didn't have any information bookings related, but they are losing less money. So the market's like that. And obviously, guys, Virgin Galactic as of now, let me pull up here the 1 year chart. The stock of this company is, let me see, 86% of the high. So we can make the case that the markets are not being very demanding with the results of Virgin Galactic. So I actually own some LIPs, guys. I purchased January 2023 LIPs with a strike price of $13. So I am not in a rush over here. And this is not a short that I am interested in when it comes to taking a trade, guys. We have a technical downtrend. Virgin Galactic is trading as of now below the moving averages. So in terms of taking a trade over here, I would need to see SPC bursting above $9. $9 coincides with this 50 SMA on the 4-hour chart. We can make the case then that if SPC can take on this 50 SMA and good volume and momentum, maybe the bulls can fill the next gap up to $11.22, an area of resistance in which they failed on February 15. If we were able to take a trade such as the one that I am telling you over here, from $9-ish up to $11.22, we're looking at a 20% profit. However, guys, I'm thinking, because as of now, Virgin Galactic is already selling their tickets for their suborbital trips. The second, and this is my opinion, I could be mistaken, I have been mistaken before, the second we have a specific date about the first suborbital commercial trip of Virgin Galactic, the stock of this company is going to go on an absolute tear. So I own LIPS, I am not in a rush, and I think that SPC should be way above $13 in January of next year. The next stock is going to be Tcod, one of the favorite stocks of Cathy Wood. So what is going on over here? Tcod went up today 0.46%, and it closed today's trading session at $65.30. And what is doing Tcod after hours? It is down, guys. I think that actually Tcod hit today a new 52-week low. And as of now, the stock of this company is 6% down. Wow, after hours. So what happened here with Tcod? So let's see. Do I have the information handy over here? Let's see. Yeah, I should have it handy. Let me see. Where is Tcod? Earnings report at. Let's see. I don't have much information here, guys. So Tcod beats Q4 estimates as lows narrows. Revenue rises. Issues Q1 outlook below street. So they are offering a weak guidance over here. Annual guidance in line. Stock down 6% late. So I don't have any specific information. Let's see. So Tcod sees 2022 revenue between $2.55 billion up to $2.65 billion. But I don't have the competitive. I don't have the estimate over here. And Tcod Health Q4 loss came in at 7. The loss came in at 7 cents per share. But I don't have any estimate either over here, guys. But according to Thinkorswim, the Q1 outlook is or came in below street estimate. So that's a reason why Tcod is going down after hours. And the stock of this company, guys, has been a tragedy. Let me pull up here the 1-year chart. Not even the 1-year chart, guys. I got to pull up the 3-year chart. There you go. So all-time high for Tcod, $308. Jesus Christ. So as of now, Tcod is trading 80% of the high. So if we apply the bubble rule, which states that when a bubble bursts, the underlying asset or the asset that was affected by the burst of a bubble finds support and bounces back up 80% of the highs, then if we make that case, then Tcod must be about to bottom out, guys. Wishful thinking, obviously, in this case. So when it comes to taking a trade over here, guys, we are in the very same situation that I just told you about SPCE. This is a no touch. This is a technical downtrend. The stock, every single attempt that the Tcod has made in order to recover has failed in a very, let's say, clear way. So this is a no touch until the bulls of Tcod can burst above $82.25, a previous area of resistance back from early February. If the bulls happen to take on $82 at least, they are going to have to take on first this 50 SMA and this 180 SMA on the 4-hour share. So that might be a sign that the stock of this company is about to get some love. Let me pull up here the 3-year chart, guys. So how low can Tcod go as of now? It is trading after hours at $61. And the next foreseeable support for Tcod, guys, would be $54. I am going to draw a line over here. $54 happens to be a previous area of support back from, get this, guys, August of 2019. So we can make the case that since the RSI of Teladoc is very low on major time frames. So maybe if the stock of this company happens to pay a quick visit down to $54, then the RSI of Teladoc is going to be way lower, and that is going to increase the likelihood for the bulls of Teladoc to find support at a previous area of support and then bounce back up. And obviously, now the $1 million question over here is Cathie Wood going to buy this dip tomorrow? We will find out about that in tomorrow's trading session. Sofi is going to be the third stock of this video, which went down today a lot, guys. This was one of the victim of the worst victim of today's trading session, going down 10% and closing today's trading session at $10.26. So what happened in the case of Sofi? So Sofi is buying a software company for $1.1 billion. They are acquiring a company which name is Technisys for $1.1 billion. So let me see if I have any other information over here. Digital personal finance company Sofi Technology agreed to acquire Technisys, a cloud-native digital multi-product core banking platform. So Technisys shareholders will receive aggregate consideration of 84 million shares of Sofi, less than 10% of Sofi's fully diluted share count as of September 30th of 2021. It says here it should be 2022. This must be a typo, right? The shares have an aggregate value of $1.1 billion based on the volume weighted average price of Sofi. So Sofi is paying with common stock, okay, for this company. And you guys know that usually, guys, when a company acquires another company, the company that is paying, or the company that is putting the money on the table goes down, right? So the acquisition of Technisys is an essential building block in delivering on our member-centric digital one-stop shop experience for Sofi members and our partners through Galileo, our provider of fintech cloud services. So this is an interesting acquisition, I think. And Sofi isn't putting any money on the table. They are paying with shares of the company. But the markets didn't like this acquisition, guys. And the lower Sofi goes, guys, it is becoming more attractive from a long-term perspective. So I am going to pull up here the 3-year chart. And Sofi is trading after hours, guys, at $10.36. So Sofi is approaching an all-time low. So $10.10 acted as lower support in November of 2020. So we can make the case that if Sofi keeps on dropping, the bulls might find support at $10.10. And obviously, guys, if I pull up here the 4-year chart, this is a very ugly looking chart, a clear downtrend, a technical downtrend. Sofi is trading below the moving averages, however. And since I am interested in investing in this company at a long term, a visit down to $10. And if Sofi happens to find support over there, I am going to be tempted in order to pick up some shares for the long term, guys. When it comes to taking a trade on Sofi, as I said, guys, this is a very ugly looking chart from a trading standpoint. Sofi shouldn't be touched unless the bulls can take on $13.57, a previous area of support back from mid-August. But when it comes to starting a long-term position, this is a whole different story. And the RSI of Sofi is, as of now, 25 points, very low. So maybe if $10 happens to be visited in an aggressive way, we can make the case. You guys already know that the RSI is going to be way lower, and this might increase the likelihood for the bulls of Sofi to find support at a previous area of support and then bounce back up. And the last stock of this video is going to be Home Depot. And in the case of Home Depot, the stock of this company posted a very solid earnings report today, and it went down almost 10%, guys. And check this out. Why did Home Depot go 10% down today? Well, because the company said, let me see if I can find the information over here. The company said that they are expecting a slight growth. Okay, here it is. Home Depot sees full year 2022 sales growth and comparable sales to be slightly positive. This word slightly cost Home Depot a 10% drop in today's trading session. Unbelievable, guys. Check this out. So EPS came in at $3.21, beating the estimate of $3.17. Sales came in at $35.70 billion, beating the estimate of $34.87 billion. So Home Depot beats on sales and EPS. And when it comes to guidance, I already told you that the company expects a slightly positive sales growth. On full year 2022, they raised its dividend. Take a look. So Home Depot raises quarterly dividend from $1.65 to $1.90, guys. Unbelievable. They are raising dividend. No, I mean, nothing matters for this market, guys. It is all about selling. And when it comes to comparable sales, let me see if I can find. Okay, so Home Depot sees now raise quarterly. Okay, Q4 US same-store sales up 7.6% versus the estimate of 5.4%. Guys, this was a great earnings report across the board. But since they said that growth for full year 2022 when it comes to sales is going to be slightly positive, then let's sell out of Home Depot, guys. This is unbelievable. From a technical standpoint, the stock of this company is very oversold. You guys can see here on the 4-hour chart, it's RSI at 18 points, very oversold. And obviously, as of now, Home Depot is a falling knife. And I need to see the stock of this company trying to consolidate slightly above $318. $318 happens to be a former area of support back from mid-August. And mind you guys, the stock of this company has a very important institutional participation. And when we see stocks such as Home Depot selling off in a very aggressive way after having posted earnings, then the sell-off process of the big institutions usually take up to 2 trading sessions. So we can make the case that Home Depot might still be under pressure tomorrow. We have to be very careful buying this dip. However, and as I said, if I happen to see a process of consolidation slightly above $318, I am going to be tempted in order to pick up some shares of Home Depot, in which case my price target is going to be $325. $325 happens to be a previous area of support back from early October. If I were able to take this trade the way that I am describing it, from $318-ish up to $325, we are looking at a 2.34% profit. So very good earnings report for Home Depot. And the markets, I don't know what the markets want, guys. I mean, this is absolutely unbelievable. And with Home Depot, I am going to wrap up this video. Thank you very much for your attention, and thank you very much for hanging out with me once again. Remember and keep in mind, guys, that here on the Bilingual Stock Market channel, we are posting stock market update videos Mondays, Tuesdays, and Thursdays as well. So no video tomorrow. We are going to be back on Thursday. So if you want to get all of the notifications of all of our videos in a timely manner, you have to be subscribed to this YouTube channel, but you also need to activate the notification bell right up there. Follow us on Instagram as well, guys, at Bilingual Stock Market. And remember that this is the Bilingual Stock Market channel, the YouTube channel, in which we talk about the markets, but we do things differently because we talk about the markets in 2 different languages, English and Spanish, so you can pick your preferred language. But most importantly, this is the YouTube channel in which we know that the wonderful world of Wall Street is not for geniuses, it is for entrepreneurs, just like you guys and myself. My name is Alvaro, and I will see you guys on Thursday once again, 3 or 4 hours after the market closes. Peace out.